Okay, so it's day 66 of the daily dollar cost average for Bitcoin. And I'll get right into it, do the conversion from DAI, the stablecoin, over to Bitcoin, $333. Okay, so that's done. And we'll just take a quick look at the portfolio. So there you go. You have 42%, 42.5% roughly of Bitcoin. Um, it's almost a 50-50 split with a little bit less. Like there's a little bit less DAI in there now. But anyways, there you go. So that's the portfolio right now. It's mostly Bitcoin. I don't know if you've been watching, but like Cardano had a really good run there for a while. Like Chainlink had an amazing run, like a really, really good run. 1 week, had a low of like $39, whatever, 30 something, $38, 38, $39, whatever it was, around $39, all the way up to 53. Like that's incredible for a week. But anyways, yeah, it did really well. But yeah, a lot of the alts are doing very well right now. We can look at them. Yeah, this Anchor, I had Anchor at, I had it at 19 cents and it went up to 25 cents. I should have kept that, but whatever. I'll buy it when it goes to single digits. I'll buy it back. But the big ones like Ethereum's doing amazing, Cardano's doing amazing, Chainlink's doing amazing, and Anchor's doing amazing. Bitcoin's just, again, it's just kind of hovering. It's doing okay. But I saw this one video here from this Willy Woo, and it seems to be pretty good. But again, it's essentially the same thing, like basically like Michael Saylor saying. And he's just saying that because of supply, like he has some sort of model that it's all based on supply and so on and so forth, and he uses it from a very technical point of view, like a TA point of view, technical analysis point of view, that it's just going to keep going up. That seems to be the consensus with all the fanboys, Bitcoin fanboys out there, that it, no matter what, you can't lose. Like again, you got this Raul Paul predicts Bitcoin, predicts the Bitcoin bubble. So he's saying like Bitcoin to a million. You've heard it all. So then you got this guy's top Bitcoin risks debunked, so on and so forth. But this Willy Woo, this is actually a good video, and we can watch this one.
We built our icons of future.
Just again to but he's not really saying anything new. Like I guess if anything, it just reinforces what you might already think. But he's not really, I don't think, saying anything we haven't heard before.
Going back to the supply shock.
So we'll just listen to him.
We've just never seen in the history of Bitcoin so much of the coins being scooped up and bought and locked away by very strong holders of the coin.
And then you wrote, my macro top target has now increased to 300K and previously it was 250K. Can you elaborate on what you meant there?
It has protected every top in Bitcoin history. And so currently that top target is launching upwards. And at the start of this year, January, it was zoning into a area of $200,000 to $300,000 by December. And December of this year is typical to what we would expect for the end of a bull market. If we get that, not saying that will happen this time around, but if we do top out in December, that target now is lifted to above 300,000 because the trajectory of that upper band of that moving average.
Bitcoin price prediction by Willy Woo for December of 2021. In this video, on-chain analyst Willy Woo gives us his updated Bitcoin price prediction for December of 2021 based off a Bitcoin top model that has predicted the top of every single one of Bitcoin's last bull runs. Make sure to stick around to the end of the video where technical trader Peter Brandt explains why we are nowhere near a Bitcoin bubble, and we go over some recent bullish on-chain data that suggests where the Bitcoin price is likely to go from here. Also, only a tiny percentage of my viewers are actually subscribed. If you enjoy the video, consider subscribing. It's free and you can always change your mind. Enjoy the video.
And Willie, in one of your recent newsletters, you wrote, quote, Bitcoin is undergoing the largest supply shock in its history. The steepest price rise seen so far in 21 has been supported by strong fundamentals. And then you wrote, my macro top target has now increased to 300K and previously it was 250K. Can you elaborate on what you meant there?
Going back to the supply shock, we've just never seen in the history of Bitcoin so much of the coins being scooped up and bought and locked away by very strong holders of the coin. And we can see this from tracking the flows of coins out of the exchanges, where typically people speculate or buy and sell their coins, and they have a set inventory, some of which is allocated for speculation. And we've just seen an unprecedented amount of depletion of that inventory. If you look back in the 2017 bull market, we saw like a 5-month depletion of inventory, and that was enough to propel the bull market of 2017 right up to the 20,000 from what initially was about $1,000 to $1,500 when that inventory depletion ended. And now we're kind of in this zone of 11 to 12 months of inventory depletion. We've not seen this before, and you can look on chain and look at the holders, and you can see the wallets that the holders, the behavior of the wallets by the holders. And there's a category where we term illiquid. These guys are just accumulating, buying and accumulating without any history of selling. And these guys are just hoovering up the coins. So there's a real supply shock. There's less and less coins each week that goes by that's available to be bought. And so obviously there's a mismatch between demand and supply, and that has launched the price vertical. And for some technical traders that do trade indicators on the price fluctuations, they're all screaming overbought, overheated, whilst if you look into the ledger and see the demand and supply of the coins by fundamental investors, you can see that it's fully supported. And so I run a very simple model. It's called it's a mean reversion model, which is in simple terms is a moving average on the market cap, all-time moving average, and you can use that to predict tops. It has predicted every top in Bitcoin history, and so currently that top target is launching upwards. And at the start of this year, January, it was zoning into a area of $200,000 to $300,000 by December. And December of this year is typical to what we would expect for the end of a bull market. If we get that, not saying that will happen this time around, but if we do top out in December, that target now is lifted to above 300,000 because the trajectory of that upper band of that moving average.
Attention traders of all kinds. If you're a Forex trader, an options trader, a stock trader.
It's very unusual because normally what you expect is as more retail comes in, more mums and pops, ordinary people off the streets, they tend to buy their coins and hold them on their exchange wallet because it's just a very easy experience. So we've had this general trend of more and more coins being stored on exchanges like the Coinbases of this world. It's a very easy to use experience, but in this particular cycle we're seeing huge amounts of coins move off exchanges and being locked away under their own custody, and that's a signature of institutional players coming in and high net worth individuals. They tend to store their coins under custody and in cold storage. So Those clues and just the sheer size of the purchases, you can see the size of the withdrawals coming out from the exchanges. They just really point to institutions scooping.
So again, it's just the same story that it's always different. Like everybody says it's different. And it is this time, is that it's mostly institutional money that is driving this whole thing. It's not just, Joe Jackass in his mom's basement, buying and selling Bitcoin. It's institutions, and they, and again, it's like they're detectives that they have to, look at certain pieces of evidence and then deduct from that what's going on. And one of the main indicators that this is going on, that it's institutional money that's pushing it, is like he was saying, like before people looked at like Coinbase. Basically what I'm doing, I'm just leaving it on Coinbase right now, right? But most people who are, serious investors, and the reason why I'm leaving it on here is just so I can, make a point. I'm just showing people what I'm doing. But what most serious like Bitcoin investors do is they take it off the exchange. They put it in their wallet. And so he's saying that all this money that's being bought up it's being taken off the Coinbases of the world. Like it's not staying there. And he's saying that's a sign of, and just by the sheer size of the transactions, it's an indicator that it's not just some, regular people. It's institutions that are buying it, pension funds and so on and so forth. And you're going to see, like I said, it's going to be, it's a different game. And everybody's basically the same thing. Like they're saying, like, Michael Saylor, all these guys are saying the same thing. It's being driven by institutions. And it's just, like I said, now the stakes are getting bigger, But again, I just from experience in other investments, because like I said, I was in equities and derivatives and so on and so forth before, is that when you hear everybody talking that everything is shits and giggles, that's when you got to start to, to be concerned. Like, I'm not saying go out and sell it. I'm not saying that at all, but I'm saying that's exactly why I do what I'm doing, because when you hear everything, nothing can go wrong. That's when something goes wrong. It's just going to take something. And again, I'm not, starting rumors or anything, but all it would take is something like, Washington to really go after, like say, Joe Biden says, this whole Bitcoin thing is a joke. We're going to, he's got control of the House, right? So if he says, look, we're going to put like a 90% tax on capital gains of Bitcoin, like in particular, like if other investments, okay, it's going to be taxed at the same rate it normally is. This whole cryptocurrency thing, 95%, 90% or something like that, you'd watch it fall, And they were talking about putting that tax. They said a mark-to-market tax. And that means even if you don't sell it, you got to pay tax. So like say something like that comes in. It's just, you got to be very cognizant that, nothing is perfect. Like, and again, it can come from out of nowhere. And that's what makes it, so volatile. Any investment, if it's like, look at gold, like when the United States made gold illegal. Like, could you imagine if you had all kinds of gold and then one day you find out it's illegal to own gold? And governments can do that. They can just change laws. That's what they do, right? So, but anyways, it's just one of those things that like you have to look at it from a very, non-emotional point of view. You gotta look at it just try to be objective and look at it, like a real investor. Don't look at it from you're gonna take it to heart or anything like that. But anyways, that's about it for today. He's just essentially saying the same thing that Michael Saylor saying that, that it looks like a great investment, so on and so forth. And it's driven by institutional money. That's essentially what he's saying. So anyways, that's it for today. And I will see you tomorrow. Take care.